Ladies and gentlemen, good day and welcome to the Kirloskar Brothers Limited Q1 FY2024 earnings conference call. This conference call may contain forward-looking statements about the company which are based on the beliefs, opinions and expectations of the company as on the date of this call. These statements are not the guarantees of future performance and involve risks and uncertainties that are difficult to predict. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Sanjay Kirloskar, Chairman and Managing Director, for opening remarks. Thank you, and over to you, sir.
Thank you. Good afternoon, everyone. On behalf of Kirloskar Brothers, I'd like to extend a very warm welcome to everyone for joining us on our call today. I hope you've had the opportunity to go through the financial results and investor presentation, which have already been uploaded on the stock exchanges and the company's website. Happy to report that during the quarter, consolidated revenues grew by about 14.7% to about close to 900 crores, and EBITDA grew by about 140% to about 115 crores, with EBITDA margin of 12.8%, an increase of 671 basis points. This is a testament to our efforts to improve the product mix, increase operating leverage, and reduce input costs. The domestic business grew by about 3.8%, and the international business grew by 27.7%. In addition to the sustained momentum of demand and made-to-order and engineered-to-order pumps, our made-to-stock orders also increased. We anticipate the growth momentum will continue in the forthcoming quarters due to the robust order book. As for the quarter ended, we witnessed a consistent upward trajectory in the consolidated order book as well at 3,020 crores, a growth of about 15.7% year-on-year. I now request both Alok and Rama to speak about the performance of our businesses. Alok?
Yeah, thank you. I'm pleased to report that the international business, which we may refer to as KBI BV, witnessed a growth of 27.7% over Q1 FY23. Most of the international subsidiaries witnessed a healthy growth on the top line along with an expansion in operating profit margins. This was mainly on account of the company's efforts to offer value-added services, niche products, along with creating a sustainable cash-generating business streams. SPV Pumps UK has a global presence serving customers in different regions, and the focus is on innovation, product development, and customer service to maintain its competitive edge in the market. In this business, we focus mainly on fire pumps for industrial plants, fire pumps for commercial buildings, and as well as oil and gas. In addition to this, we focus on pumps for water utilities and for chemical markets, as well as the service business. In the U.S., we cater to commercial real estate side of the business with focus on fire and water again. As highlighted here, there is no service business in the U.S. Entity. In the Dutch market, we did witness good traction on the revenue side. Here, our focus remains on turning around the Dutch operations, further diversifying the order book by creating more daily businesses around distribution and services, and continue growing our share of framework contracts in the service business. Our Dutch entities will be launching unique and innovative products which are focused on the Benelux region. We believe this value proposition will be a growth driver for turning around this business, along with various cost-cutting initiatives which we have already progressed in. On our South African business, service side is performing well. Our South African business has major service contracts in the power and mining sector. In addition to this, they have a lot of product sales into both the mining and distribution sectors as well as chemical sectors. Overall, the business continues to do well on the operational and financial side. In our Thai business, we're focusing on replicating the model similar to India with distribution. Here, our focus areas continue to be on building and commercial markets, fire markets, and chemical and industrial markets. Our endeavor is to increase the services portion of this business as well. We anticipate the increased investment in energy sectors and advances in pump technology will drive demand for pumps and have a positive effect on the global pumps market. In the future years, this will benefit KBL and our international subsidiaries. Additionally, the international business has invested in services and framework contracts. There are currently over 100 active framework contracts across all operations. We will continue our efforts to expand this business, where we have implemented AI, AR, as well as our 3D printer giving us some advantages. Our strategies and top priorities are geared towards fortifying our offering, enhancing our geographic presence, and expanding our market share, focusing heavily on our smart and innovative solutions and establishing new benchmarks for product innovations, efficiency, dependability, and sustainability, which we hope will drive sustainable cash flows and profitability. With this, let me invite Ms. Rama Kirloskar, Joint Managing Director, KBL, and MD, Kirloskar Limited, to take you through the performance of the domestic subsidiaries.
Thank you, Alok. The company's domestic operations witnessed good traction driven by product mix. Our company is made to stock pumps which cater to the agricultural, housing, and industrial range, maintained robust growth. We also continue to witness a healthy order inflow, which is reflected in our order book. The EBITDA margins expanded mainly on account of operating leverage, continuous focus on cost rationalization and process optimization. Now coming to the domestic subsidiaries and JVs, the Kolhapur Steel Limited, we are experiencing good traction, and the main focus is on acquiring new customers. We have been successful in onboarding new customers, and the 52% year-on-year revenue growth for the quarter is a strong indicator of the company's progress and market acceptance. As far as Karad Projects and Motors is limited, we're targeting year-on-year growth for the small pump business as well as to our APOEMs, which are large businesses for us. For Kirloskar Ibara Pumps Limited, KEPL continues to have a healthy order board of around 451 crores for this year and will continue its growth trajectory. With this, let me invite Mr. Chittaranjan Maki, our CFO, for the financial performance highlights.
Good afternoon. Let me start with consolidated financial performance highlights first. For Q1 FY24, net revenue from operations grew by 14.7% year-on-year to 899.5 crores. EBITDA grew by 140% year-on-year to 115.5 crores, while EBITDA margin expanded by 671 basic points to 12.8%. Profit after tax grew considerably by 310% year-on-year to rupees 63.6 crores. Now coming to standalone performance, for Q1 24, net revenues from operations grew by 7.2% year-on-year to 581.2 crores. EBITDA grew by 90.6% year-on-year to rupees 58.9 crores, while EBITDA margin expanded by 440 basic points to 10.1. Profit after tax grew considerably by 321% year-on-year to rupees 33.7 crores. This is all from our side. We can now begin question and answer session. Thank you.
Thank you very much. We will now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking questions. Ladies and gentlemen, we will wait for a moment while the question queue assembles. To ask questions, please press star and 1. The first question is from the line of Kunal Sheth from BNK. Please go ahead.
Yeah, hi. Thank you for the opportunity and congratulations for a great set of numbers. My first question is pertaining to the international subsidiaries. There we have had a great performance, about 28% kind of top line growth and 17% margin. And I see in your investor presentation that is largely driven by uptick in both SPP UK and USA, both in terms of revenue and profitability. So if you can elaborate a little more in terms of what is changing there and how sustainable that is.
Kunal, thank you, Kunal, for your question. I think, like we've mentioned the last few times, in the US business, we have a much higher level of automation that has been put through, and the number of people that we operate the business on is quite few, and we have a very good ratio in terms of revenue per person. So really, cost reduction over there is one area that has helped get us a better performance. of course, on the back of a slightly better amount of sale, because we see that as I mentioned last time, we've also launched many new products in the US business, and a lot of those products, which are mainly in the fire segment, especially in the data center segment, have done reasonably well, and we have a very specialized product there, which is very well accepted by the majors like Google, at AWS, as well as Microsoft as well. So I would say that's a few reasons why the US business has done better. The UK business, like we've mentioned, we've been trying to change the mix of the UK business. We have a little bit more mix coming from the services side of the business, and a little less from the side which is to do with the bigger pumps, especially in the oil and gas sectors, which typically are large in revenue but are low on margins. So I would say the mix is a little bit more favorable in the UK business, and that's really why we are showing the numbers that we are. I hope that answers your question.
Sure. Thank you for that clarity. My second question is pertaining to the domestic market. The domestic market has seen a slightly slower growth, 9% top line growth this quarter, and even when I see the order book accretion has been 6%, about 19 billion, and order book accretion in the domestic market has been slightly slow in terms of in that 6-7% growth range for the last 2-3 quarters. So anything that you can point out in the domestic market, is the market slowing down, or is it largely driven by the made to order pumps and therefore growth will come back? Slight flavor on the domestic market would be helpful.
So to answer that question, we believe it is in line with the growth in the market currently. I believe the growth is around 6 to 7%. I don't believe there's a slowdown. In fact, the industrials market is booming currently. We are seeing a lot of orders. So we do believe it is in line with the general growth.
Okay. And what should be the steady state growth then one can assume in the domestic market from a medium term perspective?
Hello?
Yeah, hello.
Can you repeat the question?
Yeah, I was saying that what should be the steady state growth one should assume in domestic market in that case?
I don't know whether we can make you a statement like that looking forward, but I think we will grow faster than the economy.
Okay. Sure. Then, sir, my last...
Mr. Seth, I'm really sorry to interrupt, but we request you to rejoin the queue for further questions.
Okay.
Thank you. Before we take the next question, we'd like to inform participants that in order to ensure that the management is able to address questions from all participants in the conference, please limit your questions to 2 per participant. The next question is from the line of Renjit Sivaram from Mahindra Mutual Fund. Please go ahead.
Yeah, hi sir, good evening and congrats on good set of results. So after a long time we are seeing 3 consecutive quarters of good performance from us. So do you really feel that it's so real that this turnaround is much more sustainable compared to the previous times when we are shown?
Sivaram, I'm really sorry to interrupt, but we can't hear you very clearly. In case you're on a speaker, please request you to use the handset.
Am I audible now? Is it fine? Hello?
Hello?
Yeah, is it fine now?
Better.
Yes, sir. Better. Please go ahead.
Yeah. So my question is that, like, after a long time, we are seeing this sustainable kind of performance for 3 consecutive quarters. So is it? Are you seeing that this is more of a kind of the new normal for us, or you feel that there is still some kind of a one-off in these kind of results? Is it a steady state kind of a performance going forward from this? Just to get some clarity on that.
I mean, you were still echoing, but from what I understand, you said this is the third quarter which is showing growth, and is it sustainable? And I'll answer on that basis. And you also wanted to know whether there was a one-off or something like that. I can only assure you that there was no one-off, like we had pointed out a few quarters ago. We hope that it is sustainable. I cannot make any definitive statement, as usual. We've refrained from making forward-looking statements.
Okay. And sir, which portion of the economy you are seeing the good demand? If you can point out at least a couple of segments. I know that you are more broad-based, but is there any particular segment where you are seeing some good traction?
We normally don't give information segment-wise. I think we give far more information than most companies do. I've seen whether it is local or global players, they basically report only one segment, which is fluid handling machinery. And we do see, having said that, the B2B segment is something that is got good traction.
Thank you. The next question is from the line of Varun Bang from Bryanston Investments. Please go ahead.
Yeah, congratulations on good set of performance. My first question is to Alok. Alok, our customer base in services and framework contracts is growing rapidly. So in the medium to long term, what cross-selling opportunities do you see here, both in terms of converting the customer base, some of the customers to using our products, and because some of these customers would have global presence, how are we getting entry into other plants of these customers? Can you share some insights?
Thank you for the question. I'd say I just want to correct the perception. We've talked a lot about services, but services account in the UK only for 37 to 38% of revenue, which is a large chunk, but the remaining is all products. And it is obviously a products company selling products, like I mentioned earlier, in water supply, firefighting, oil and gas, chemicals, industrials, and those are our key focus areas for the remaining 60-odd%. So we are still a products company, and when we do services with two objectives. One is repair, refurbishment of other people's pumps, as you're aware, when we manage the sites. But of course, very often when there's a total replacement, we will ensure that our product goes in as a replacement in there. The other areas that we also work on are upgradation of efficiencies, because one of the areas that we also are focusing on is net zero, as well as how to make not just ourselves but also our customers more sustainable, and repair, refurbishment, and upgradation of efficiency. Most importantly, it's something that ticks the boxes for our customers as well, and ensures that they are more green because they are reusing the existing products, and the existing products are being made far more efficient, which is in line with the efficiency standards that are there in the industry today, and not maybe what they were like when the product was installed 20 or 10 years ago. So I would say we are doing cross-selling. That's part of the process. We do, obviously, majority of our sale is product sale. But at the same time, we are looking for opportunities of, one is, what kinds of other streams we can get out of this. So, one of the streams that we always explore with customers is whether we can install the pump and whether we can share on the energy saving. So, that's another example of a different kind of cross-selling that we're doing. It's not just a product sale, but it's a new kind of annuity income sale. So there are a few things that we are all trying all the time with customers of, how to become sticky, because really services is one of our objectives is to become more and more sticky. I hope that answers your question.
Yeah. And I think we've been focusing a lot on innovation, efficiency of the pump, and there is also a lot of consciousness around what quality we are offering. And there are a lot of features also that we offer with the product. So do we think we have been able to get desired level of pricing in the overseas market? How do you think the brand perception and the pricing is evolving vis-a-vis competition?
Mr. Malhotra, I mean, this is it's a difficult question because, on one side we have a recognized brand, which is SPP, as a European brand. And but at the same time, SPP historically has been a niche brand. I mean, SPP is only known for fire pumps. And we are really trying to extend the recognizability of that brand into other areas, like water, like, your chemicals, because that's, as a Western brand, it's easier for us to, push that brand across. So maybe in the Western countries, yes, we have a decent amount of traction in that area. And we get a good premium. I mean, because in the UK market, we sell on total cost of ownership. Usually we can get up to 20% premium because the products are far more efficient, but more importantly, they can maintain their efficiency. And we've shown this to the UK water utilities, not over 1 or 2 years, but over 12 or 13 or 14 years now, with various studies. So we are able to command that additional price because of the technology of the fact that we can maintain efficiencies, not just give high efficiencies. Coming to Southeast Asia is really, where our problems are, because, we are, like I said, we're trying to create what we have in India, a distribution network. And creating a distribution network requires stocking of pumps. It requires distributors to hold our pumps. And that's really where, we feel that we hold, it's a little bit of an uphill task because, like I said, SPP historically is known for fire pumps. KBL is an Indian brand. So there's a little bit of less acceptability over there. And we are competing against the big Western brands, and many of them are known for their full service product suite. And distributors are willing to hold them in stock because they are obviously approved by customers for all those applications, not just the applications like fire or water. They are approved for everything. So it's easier to get a distributor to stock them. So I would say that's wherever we are going for the distribution model, which we have to go for if we want more and more penetration. There is a task because we have to get the products approved with huge number of customers. Only then will distributors hold it in stock. And so it's a process. And that's really where they're going through that process. We did that in America. And that's how, American model is distribution oriented. But again, as you know, we are mainly doing it for fire. And distributors are holding stock for fire. But, we do need to extend it if we want product category by product category or application by application slowly because, as you know, we don't have hugely deep pockets. We need to do it slowly and we need to do it sensibly. So that's really what we're doing. I hope I've answered your question.
Thank you. The next question is from Amit Shah from the Nuvama Institutional Equities. Please go ahead.
Hi. So there were two things which I wanted to know was, one, post-COVID, China as a country is sort of having a bad name and we are seeing the country struggling with exports. So one, is exports, negative sentiment for China, is it helping us in any way in getting more export orders, one? And also what I would like to know is how far are we comfortable with, commodity prices in the sense that if commodity prices moves up, is the market good enough for us to increase the prices, or if at all commodity prices move down, do we think we have a strong brand where we can not reduce the prices and even get better margins going ahead? And just one more thing, what kind of capacity utilization are we running at? So, if the market grows substantially, how geared are we to, get further production going?
Okay. We've really never had any competition, as a company, not had competition with China.
Okay.
Even in Southeast Asia, our products are perceived to be far superior to the Chinese products. And especially when you go to pumps which need a lot of interaction with the customer, our superior English language skills as a country have ensured that we never faced competition with China. As far as commodity prices are concerned, we are, I think, selling more on quality than anything else, because I think we've mentioned many times in this call that in our B2C business, we are the only ones who can sell our products. We are the highest in price, and we are able to get a premium compared to the competition, and we are the only ones who sell without giving any credit. So, yes, last year we were hurt by the sudden rise in commodity prices, but I think now the processes have been improved so that we do not have such an issue. We are watching the China situation carefully, because China is also trying to reboot its economy, but we believe that it will still take some time, because once China reboots its economy, you don't know what's going to happen to commodity prices. But we, as a company, are getting prepared for that. Your last question, I believe, was on capacity utilization, and that continues to be between 60 and 70%. We have a continuous program for debottlenecking, modernization. That is why you don't see us having sudden spurts in CapEx. Thank you.
Thank you so much. Thank you so much. Yeah.
Thank you. The next question is from the line of Devansh Nigotia from SIMPL. Please go ahead.
Yeah, thanks for the opportunity, and congratulations on good set of numbers. Sir, in B2C, if you can help us with the split in terms of on-the-ground demand in agricultural pumps and residential pumps. How is it? And now that the commodities have softened, so can you help us understand how much gross margin were impacted last year and the benefit we can see this year?
Fortunately, we don't disclose this information. We don't disclose the gross sector-wise margins, nor the split between agri, domestic, and industrial.
My question was, how is the demand, on-the-ground demand, shaping up, and our outlook for the same? I'm not asking in terms of sales mix.
Yeah, no, the demand is picking up. We don't see an issue there.
Okay. And in terms of competitive intensity, since the demand is better than last year, is the pricing fall in the prices more than the raw material fall? How is that shaping up?
No, there isn't any fall in prices, and the competitive landscape is as usual. There has been no change.
In case of domestic B2B pumps, how has the year been? And can you just give a direction on oil and gas and few other sectors?
Right. So, in general, the oil and gas sector has picked up. There has been a lot of orders that we have bagged for both Kirloskar as well as KBL. And actually, if you notice that there's been a huge demand. However, we do believe that in terms of the number of steel vendors, that's really not enough to cater to the huge demand that sector has today, which is why one of the reasons why we see a degrowth in Kirloskar sales is because the steel manufacturers have been really full in their capacity, and there have been a lot of delays in dispatches from their side, which is why a lot of our consignments have not gone out this quarter. But that should go out in Q2. So yes, to answer your question, demand is good, but there is an issue with generally the supply chain in India. We do believe that there are not enough qualified sub-vendors, not the pump vendors, but the sub-vendors to the pump vendors.
Okay. Is it forging capacities we meant?
No, this is steel systems, mechanical steels and steel plants.
Got it. Thank you. I'll come back in the queue.
Yeah.
Thank you. The next question is from Sunil Kothari from Unique PMS. Please go ahead.
Thanks for the opportunity and congratulations, Sanjay Bhai.
Rama and Alok for such a very good performance during first quarter. Sir, first question to Sanjay Bhai. Largely, sir, we hear from like this Torrent Power has announced this pump storage hydropower, then NHPC also spoken about that. Then some days back we had our commercial advertisement about flood control in Thailand and the possibility by our product. So combining this, if you can talk about the opportunity and possibilities, how feasible these are things. Second question to Alok is on this international subsidiaries. If you remove consolidated numbers from standalone, then other expenses substantially reduced compared to last year of 80 crore. Current quarter it is 60 crore. Quarter 4 it was 68. So this is the sustainable numbers or what has changed? If you can talk about this. And to the Alok only, this subscription model, we are talking about a very big opportunity for customer, the benefits to customer. So if you can quantify and make us understand how it will benefit customer in terms of if they move to this subscription platform. And just last question to Rama is, there is a very good demand of motors. That is what we are hearing from other motor manufacturers. So what about this Karad project's capability and capacity? Are we enhancing our capability and capacity? Some talk on this will be really helpful. Thanks a lot.
So I'll take the first and the last question, and I think Alok will take the questions in between. Thank you for coming back again. We appreciate the fact that you were there yesterday in the AGM. Large pump storage schemes, I think, we introduced what we call metallic volute pumps sometime about 15, 16 years ago. And as you go larger, they have reversible turbines. With the requirement in India being earlier, being smaller pumps, we have developed a range of up to 30 megawatts. When it goes, these pump storage schemes actually require pumps of 100 plus megawatts. And while we believe we are capable, we are always asked, where is your proven track record? Now, if India hasn't had requirements of such pumps earlier, we cannot provide a proven track record. And we're therefore trying to see how, we can still deliver. Maybe we will grow our sizes. The capability is there, but I guess it's not having supplied earlier that hurts us. Many customers over the years, for the last 80 years, have trusted us to make products of all kinds for the first time in India. And while we have gone up to 30 megawatts, I think, and I can understand their situation as well, we will need to build trust to go beyond 30 megawatts. That's as far as pump storage schemes are concerned. We are talking to a few people, but let's see where that goes. As far as Karad projects and motors are concerned, I think you would be aware that it was Kirloskar brothers that made the first motor in India in 1940. And in 1946, we promoted two different companies. One was Kirloskar Electric, and the other one was Kirloskar Oil Engines, to which we divested these two businesses. And in both these areas, in return for certain promises that they made, we divested these two businesses. And the commitment from Kirloskar brothers was that we will not get into the electrical business, I believe, or motor business. We have stayed true to that. We have been working with Kirloskar Electric, and over the years, you may be aware that Kirloskar brothers in between made hermetic compressors, which were driven by motors. Those motors were made by what is now KPML. Similarly, for our monoblock pumps, we also require extended shaft motors. Again, with Kirloskar Electric, we said that we will work together. And this was done together with Kirloskar Electric. So the capacity is there. We have an arrangement with Kirloskar Electric that wherever there's captive requirements of Kirloskar Brothers, those will be supplied by KPML. And therefore, KPML makes all kinds of motors for KBL, including EE4 and EE5 motors, which we have now introduced in our domestic and agricultural and industrial pumps. And we also make in KPML the motors that are required for CAN motor pumps that we make. So that is as far as...
But sir, we never come to the market. I mean, it's only for internal consumption.
It is for internal consumption.
Okay. Right. Yeah.
I think you asked one question of flood.
Sorry?
Thank you. The next question is from the line of Jainam Gilani from Swan Investments. Please go ahead.
Hi, sir. Congratulations for a good set of numbers. So I just have a few basic questions. So our order book of 3,000 crores, over what time period is that executable?
Excuse me, would you please repeat the question? We were not able to listen you properly.
Sorry. So our order book is of 3,000 crores.
Okay.
And over what time period is it executable?
It depends on the pump type. As we've explained earlier, the made-to-stock business is not included in this order book, and because that is delivered, month on month. This is actually mainly Kirloskar Wadi factory and the international businesses, and it depends on the pumps. Some pumps will be delivered within 3 to 4 months, and some might be delivered over 12 to 18 months.
Okay. Got it. And so from our international business, what percentage of revenue would be from services? And do we have any services revenue from our domestic business?
Actually, we don't share that breakup. I did share it for SPP earlier, but we don't share it as an overall number for the group.
Oh, okay.
You mentioned that I just answered the question Mr. Kothari asked me because I didn't answer his question. He asked me whether why the expenses have reduced significantly compared to last year. And it's not that the expenses reduced significantly, but last year we had a mark-to-market forex loss of 16.4 crores, which is not there now. So that was the answer to his question.
Thank you.
Thank you.
Thank you. The next question is from Khadija Mantri from Sharekhan. Please go ahead.
Hello.
Go ahead.
Yeah, sir, I wanted to know what are the type of pumps that we deliver for oil and gas sector. Like, what are the applications of these pumps in oil and gas upstream, downstream industry?
Exactly which pumps are we talking about?
What kind of pumps are going into it?
Oil and gas industry.
Yes, so these are American Petroleum Institute certified pumps. And it can be both API, API or non-API. So KBL supplies the non-API, Kirloskar, Ibarra, Rodelta and SPP supply the API. KEPL supplies downstream, SPP UK offshore or upstream, and Rodelta is midstream.
So, if you want the type of API, we supply BB2, BB3, BB4, BB5, and VS4, VS5, OH3 and OH5. And OH2. So those are the categories within API that we supply, and non-API is ISO 5199.
Okay, sir. Thank you very much. And also, I just a bookkeeping question. I just wanted to understand this Kirloskar Wadi, is this our main manufacturing plant for pumps? And also, where do we procure our steel casting for pumps?
Our made-to-order and engineered-to-order range comes from Kirloskar Wadi, and our made-to-stock comes from Devas, Sanand, and Kannur plants. We have 3 captive foundries in Kirloskar, that's steel, cast iron, non-ferrous, and as well as replicast, which is essentially steel. And TKSL gives very large steel grade castings.
Okay, ma'am. Thank you so much.
Thank you. The next question is from the line of Manish Goyal from Thinkwise Wealth Managers. Please go ahead.
Thank you so much, and hearty congratulations to entire team at Kirloskar for wonderful performance. Just few questions first to Alok. On the international, you did mention about the improvement in the revenue front and the margins. So Alok, would just like to know that how sustainable it is in terms of probably we take a near to medium term, especially in US operation this quarter we have seen 15% EBITDA margin and UK also improving. So just want to know that, and also want to clarify that is there any restatement of numbers for US and UK subsidiary for Q1 FY23? Basically, when I probably saw the numbers this time, there has been some change at US numbers and UK. Basically, US has increased and UK has been reduced. That was one. And then second question is on the subsidiary data. When it is presented in the annual report, the intergroup elimination line item shows a positive EBITDA of 7 crores and PAT of 9 crores positive. So maybe Mr. Mate can clarify that. The second question on the nuclear pump as to what is the status on the tender for the fleet ordering? Like we had supplied boiler feed pumps as a development order. So how is it performing and any feedback on that? And then we were also looking for a development order for primary heat transfer pumps. So have we got it, and how do we see it going forward? And how big can be this opportunity for the fleet ordering? Thank you.
Mr. Goyal, the first part of your question, where you mentioned the change, the second part of your first question, where you mentioned the change in the numbers, I'm not sure I understand what change has been made, but I'll answer the first part, which is America and the UK. I mean, it's hard for me to give you whether it will be 15.5 because that will be a forward-looking statement. But what we are saying is that we are all making efforts, as we've said before, to get the margins going in the right direction, and the real focus really is in the UK at the moment to get that in the right direction as well. The US business is dependent on distribution, like I said, and that generally has a range in which it operates. One of the reasons why we've seen a little bit of a jump in the US numbers is because the supply chain disruptions that were there before were eased out a little bit, and a lot of the suppliers were able to supply as per the original lead time. So that also helped up the revenues because of that change, and obviously with that there was some level of operating leverage. But I would say that we are obviously making an effort to ensure that we are able to grow and sustain in all areas.
Sure. And in US, sorry Alok, but we're probably seeing some stress on the commercial real estate part. So probably the kind of revenue growth we are seeing, just want to know that how is the pipeline for you guys?
What is the pipeline? The pipeline in the US is quite strong at the moment. And as you know, there are many initiatives going on in the U.S., including the Inflation Reduction Act. So because of that, also there are investments in the U.S. at the moment. As you know, we are focused on fire pumps and municipal water and commercial real estate pumps. So while there are investments in many areas, we are very focused in these areas. So we won't necessarily get the benefit from everything, but we will try our best to get the benefits in these segments that we operate and where we're getting penetration.
Sure.
As far as the nuclear side of the business, I think last time I have informed you that KBL has delivered a pump which was fully indigenously designed and manufactured for the first time in the country for a large nuclear power plant. This has been delivered to NPCIL. I don't believe it's commissioned yet. And on the primary heat transfer pump, I had informed earlier as well that we have received a development order. That work, we had kept it on hold for certain reasons, which were also disclosed earlier. But now we are moving full speed ahead to ensure that this pump will be fully made in India. As we have again mentioned earlier, the primary and the secondary heat transfer pumps for the fast breeder reactor at Kalpakkam were the 500 megawatt one, were again fully indigenously designed, developed and manufactured by KBL a few years ago. So we believe that this should not be a problem.
But sir, what could be the opportunity? Like, what is the status on the fleet tender for the fleet ordering?
There was one order that they had released in Haryana. Then I understand they are moving ahead with some more orders, and they're working with large EPC contractors who will be placing the orders on the pump, for the pump.
Okay, thank you.
Thank you. The next question is from the line of Mehul Panajani from 40 Cents. Please go ahead.
Thank you for the opportunity, sir. I have one question because Mr. Alok was answering to one of the earlier questions. There are some pumps which have been utilized by companies like Microsoft, Google. So can you please throw some light on this? I mean, what is the utility of these pumps out there, and what are these pumps actually?
So these pumps are mainly, like I mentioned, going into data centers, and a lot of data centers of especially Google, AWS, and Microsoft are fire pumps. Definitely a lot in America, but also I think most of the ones in Europe as well. So that's what I mentioned, that they're used in data centers.
And classify what pumps are these?
Fire pumps. Fire pumps.
Yeah, fire pumps. And like, is there any standardization like how we have for oil and gas? We have API pumps.
Yeah, they have. There's a level of standardization for these pumps, and that's really why we are able to get them in good numbers, because usually they are designed. The data centers are designed by big engineering companies, people like Arup and all these guys, and so the specification is sort of put through them usually, or they sort of come up with the specification.
Right. Thanks, Alok. One more question around this. So how long KBL has been manufacturing fire pumps? Is it been since early days, or it's a very recent addition?
It's been making firefighting pumps since the 1970s.
All right.
In fact, at that time in India, there was a standard called the Tariff Advisory Committee, TAC, and they had a standard. Over a period of years, that standard has gotten diluted, and now people ask for all kinds of standards. Being a global player, KBL and SPP qualify to almost every global standard that's possible. And about a decade ago, KBL was the first pump company in India to have FMUL approval for its firefighting, the factory as well as its products.
Right. Thank you so much, sir. One more question, and I was going through the transcript of the last quarter, and to many of those questions, the management has answered that, the last 10 years the company has moved from mainly from EPC to products, to focusing more on products. So can you please throw some light on this? How the company has envisaged that this was the way to go, and what was the strategy behind this? Because it's a complete transformation in the company. So if you can just throw light on it.
I think the rest of them may get bored, but
yeah, I'm sorry.
We realized that when we started going into this business in a big way of EPC contracting, that we were running short of money, And after some time, it got to be that you had to get a new order so that you could get the advance so that you could pay your bills. And that is why I think around 2008 or 2009, we decided that we would stop getting new orders for the EPC business. And we actually have delivered more than 12, 13 years ago. But there are various reasons why these projects got commissioned or the pumps got installed slowly, the projects got commissioned slowly, more to do with the fronts being made available by the end customers. And therefore, we decided that we would get into products in a big way. We have, I think we make the largest number of products in the country. Our products are appreciated by customers not only in India but all over the world. And I've said this also before that we are, in our business, we are the only company that designs in India and manufactures in India for the world. So, and our products are accepted around the world because they meet global standards, whether of quality or performance or delivery. We make some of the most efficient pumps in the world. I think we've spoken earlier about our lowest life cycle cost pumps, which were developed jointly with SPP sometime in 2006 or 2007. That product was very quickly appreciated in Britain, and I'm happy to tell you that we have over a 70% market share in Britain with the private water companies. And increasingly, it's getting popular in India. So the reason was for making that change was the fact that working capital, we required more and more. The debtors ballooned, WIP ballooned, and we were not very comfortable with that. So that's why we made the change.
Thank you so much. Appreciate your response, sir. Thank you.
Thank you. The next question is from the line of Ajay Surya from Niveshaay. Please go ahead.
Yeah, sir. So congratulations on a great set of numbers. So my question is more on the solar pump side. So how are we seeing demand, or are we catering to any new solar system?
We, before Rama says anything, before Rama was born, actually, we got into the solar pump business in 1986. We were the first ones to introduce these products in the country.
So we continue to supply to system integrators. We don't directly deal with state departments. I think we've mentioned this on our previous calls as well.
So are we seeing, because the government has come up with the Kusum Yojana, so are we seeing a good set of demand from that side of policy or announcements, or is the demand just normal for solar pumps?
The demand there, it is, I would say the demand is as usual. It's the same as it's been for the last few years.
Okay, thank you.
And that's probably because we work with a lot of system integrators. You know, we get our money for our pumps as they are delivered. We do not have to wait for whatever issues the other companies need to wait, the ones who are who do integration.
Okay. Thank you.
Thank you. The next question is from the line of Concall from BNK. Please go ahead.
Yeah, hi. Thank you for the opportunity again, sir. Sir, I just wanted to check, in our annual report, in other expenses, we have a legal expense as a large expense, about 67 crores in last year's annual report, and that has been recurring. So, what is that pertaining to, and is it likely to, go down meaningfully over the next few years?
First thing, Mr. Kunal, I would like to clarify that if you have seen the figure in annual report, it is legal and professional and consultancy fees.
Right, sir.
They are not legal expenses.
Right.
It's a mix of various things. And the breakup of that we cannot disclose here because that is matter is sub judice.
Okay. So, but last part of it be professional and other things and not legal. Would that be right to assume?
Yes, the major portion is professional and consultancy fees.
Okay, sir. Sure. And sir, lastly, on margins, sir, both on the standalone and consolidated, I know you've answered it in a certain way, but would it fair to assume that whatever, hard work that we have put in over the last few years, in terms of cost and product mix, the current level of margins are sustainable?
Current level margins do not have any extraordinary items.
Right. So, sir, would it be fair to assume that these margins are sustainable?
We will try our best.
I think that would be a forward-looking statement. I think we've always mentioned that, we don't like making forward-looking statements. The only guidance I would give is, please remember what we have said earlier, and please look at because all of you look at quarterly statements, look at the way the company performs from quarter to quarter, first quarter, second quarter, third quarter, fourth quarter. You'll see that there is a certain way that the company performs. And beyond that, I will not be able to say anything.
Sure, sir. Thank you.
Yeah. And the other thing is, we had an EGM a few months ago that was requisitioned by Kirloskar Industries. At that time, the company had put out an explanatory statement. There's a lot of answers to many questions over there, and that would help you understand the situation.
Sure. Thank you so much, sir, and best of luck for the year.
Thank you.
Thank you. The next question is from the line of Neeraj Thakur from Profit Tantra Financial Services. Please go ahead.
Thank you for taking my question. My question is from Alok sir. Sir, since we have a good portion of services business, is it possible, since it is a sticky business, services business, is it possible to share how much cash flow we would have generated last year or current quarter? Just to throw some light on that, how much cash flow we would have generated.
Actually, sorry, earlier also I mentioned we don't break it up by segment like this, nor do we report the percentage of the cash flows. But I did mention it in the case of STP what it was, but usually we don't break it up and identify it separately.
And sir, one more thing, since this data center fire pumps, now India is also seeing a lot of traction in data centers. So we have any opportunity as a company to supply pumps in India also in so many data centers?
We are already supplying pumps to India to the same three entities which I mentioned, because the pumps are already approved for the entire group.
Okay. And sir, any major capex or any new acquisitions in mind in abroad? Or any major capex is planned for the current year, sir?
I don't believe we can make such a statement.
Okay.
Thank you.
Okay. Thank you.
Thank you very much. Due to time constraints, we'll have to take that as the last question. I would now like to hand the conference back to Ms. Rama Kirloskar for closing comments.
I would like to state that we will continue to pursue a multidimensional approach to create value in order to consolidate our market position, increase profitability and maximize, thereby unleashing stakeholder value. Having established the groundwork for our transformation, we are enhancing our competitiveness and achieving sustainable growth going forward. Thank you for all your wishes and for joining the call. If you have any inquiries, please do get in touch with one of us or with Strategic Growth Advisors, our investor relations partner. Thank you.
Thank you.
Thank you very much. On behalf of Kirloskar Brothers Limited, this concludes the conference. Thank you for joining us, ladies and gentlemen. You may now disconnect your lines.